All right, thanks everyone for joining us today. I appreciate you taking the time out of your day to join us for Perceptive Software's webinar on selling the CFO, how to get approval for your automation project. My name is Don Dittmar. I'm the Solution Manager for Accounting and Oracle EBS for Perceptive Software. To begin, just a little bit about me and my background. I've spent about 15 years in accounting and finance before joining Perceptive Software in various areas in the accounting world: accounts payable, accounts receivable, general ledger, project accounting, tax, in a couple different industries: retail, real estate, airline, manufacturing, and really moved on to system integrations a little later in my career before joining Perceptive to kind of manage the accounting solutions that Perceptive Software offers. And what that means is we're really part of R&D. We oversee the development strategy and the positioning of our accounting solutions within Perceptive Software. And what we're here to talk about today is obviously selling to your CFO and how to make your automation projects stand out among the other projects within your company. Really focused on that today, how to make your project stand out. And we're going to use AP automation as an example, but this really could apply to any automation solution that you're taking a look at: accounts receivable, human resources, or front-end line of business, or content or automation solutions. So the return on investment for your automation project is typically fairly easy to estimate and prove out. But even with a clear ROI, it's often competing for not only budget, but also internal resource capacity: your IT department, your developers, your implementers that need to work on a variety of projects within your organization. So these other internal projects may have similar returns. Some may even be mandated so that they may have a lesser return, but they still may beat out your project. So how do you gain the edge, and how do you make your automation project stand out today? So it's important then to make connections to the other groups within accounting, within your group, and add supporters to help argue your cause in front of your executive. And we're using kind of the CFO as an example today, but it could be CIO, CTO, anyone who's going to finally sign off on the approval for the your automation solution that you want to implement. So what's the holdup today? Typically, this slide from PayStream kind of demonstrates that the top barriers to automation that prevent a company from implementing an automation solution to increase the efficiencies within their accounting department, accounts payable, AR, wherever it may be. So as you can see, the top reason is typically lack of budget, and the number two reason is that the existing processes within the organization work. So AP or back office solutions in general can be viewed as unnecessary simply because there's no visible pain at the top, so to speak. The CFO or the CIO doesn't necessarily see that AP has any real issues. In the case of AP, vendors are getting paid, checks are going out the door in your current world, so there doesn't seem to be an existing problem. Even though that it may not be efficient, you may have lost discounts, you may have inefficient processes, vendors paid late, it still seems at the base level to work. So your project may take kind of less precedence to other solutions or other projects within your company that are not working or that may be customer facing. So we're going to try to talk about a few methods to kind of tackle those and make your project stand out. And what we're really looking at today, most of you have probably seen a spreadsheet that looks like this if you're trying to get a technology or project approved. Most organizations have something like this. I kind of just grabbed this off of Google, actually. It's just a typical project listing that shows an overall listing of the potential projects available to an organization and trying to rank those within the organization to determine what gets funding and what doesn't get funding in any given year. So there's typically frequent steering or prioritization meetings to determine what makes the list and what goes above the giant red line. And what we're trying to do today is help you figure out how to move your project above that red line. So how many times have you had a valuable technology project that just doesn't make it quite above the line? Sometimes the steering committee or even the executive sponsorship understands and agrees that the value of the project is there. They believe in the ROI, they know that there's a return, but there are numerous good projects within your organization. There are several good ROIs available and limited budget and resources to go around for everyone. So someone's always going to be under the line, and you want to move your project to the top. So AP automation versus everything else. We can typically see what are you competing against today. So knowing your internal competitor can be a valuable tool in making the argument for your back office automation technology. So as you can see on the left here, bringing the bits and pieces of the ROI are obviously important. Full-time employee reduction or reallocation can be up to 80% in some cases with a good automation solution, and a massive savings in payroll and benefits costs. Storage costs can nearly be eliminated. the cost per invoices can be slashed just through the automation of the process. And it's not on the slide here, but the paying in a more timely fashion can often open up early pay discounts that were never accessible before, and this often numbers literally in the millions of dollars. Depending on the solution package and the automation, the level of automation, we often see customers that have a complete return on their investment in 12 to 18 months, with some customers seeing that gain in less than 6 months when automating their AP group. So what are you competing against? Customer-facing initiatives are usually the most important, or the most that typically win out. So AP typically doesn't face your revenue generating customers. It's not customer-facing, so those often win out even with a less provable ROI. There's regulatory concerns, security and IT or compliance, where you just don't have a choice. It's something that the business has to do to maintain the letter of the law. And then even infrastructure, just expansion or new assets, acquisitions, upgrades that keep your business current, keep it up to date, and keep it relevant in the business without necessarily focus in the back office, more frontline, line of business kinds of things. So when you want an automation solution, how do you compete? So first of all, when the ROI isn't enough, what if your CFO or CIO does believe that the back office processes work okay, and with limited resources and the limited budget are just better allocated somewhere else? This slide illustrates a little bit of the strategic importance of accounts payable in a study from the Aberdeen Group last fall that really kind of just demonstrates that improving visibility and cash flow and cash management are top priorities for many CFOs. And there's not always an awareness that automating AP really adds a level of visibility into that cash flow and cash management. Focus on management and utilization of tools to enhance the financial effectiveness really adds to the strategic value of AP. And that AP is usually uniquely positioned to support a company's cash management objectives. So how do you tell a compelling story to add additional value to your solution? What does it mean beyond just automating invoices, automating payments, maybe reducing a few headcount or reallocating headcount, or changing the kind of the landscape so that you can see early pay discounts and take advantage of those and really add efficiencies in your accounts payable group? Well, something that gets unnoticed a lot of times are areas where just automating AP also adds value outside of AP. I'm going to go through 3 today. There's just 3, but there's probably a number of impacts throughout the accounting department. These are just a few examples of where automating AP has kind of an intrinsic value outside of just the hard ROI that you have prepared for your technology project. And the point of this really is to kind of gather a team outside of AP. So we're kind of assuming that the AP process owner, the AP manager or director has a good stake in this. They know what they stand to gain. But in a lot of cases, there's gains for the other areas in accounting and finance that you just may not be aware of. So gathering a team of groups outside of, within accounting but outside of AP helps you strengthen that team and gives you a little more to go to bat with when you're talking to your CFO or CIO about what really the value of your solution is. So we're kind of assuming we've got our AP manager ready to go. They're looking for a new technology product, and they've decided on AP automation, and they want some help in arguing their case. So I've got 3 here that I'm going to run through: financial audits, supply chain financing, and a connection to tax that kind of just illustrate how automating AP has external benefits as well. So we're going to talk first about financial audit or internal control audit. And I'm going to build this slide out and then just kind of tell a little story about my personal experience in automating AP and what that added to our year-end financial audits or internal audits, depending on which you're looking at. Before automation, you're probably familiar with the typical internal control audit or the year-end financials audit. You have a Big 4 accounting typically that comes in and is selecting invoices. They're stratifying your entire population of invoices, finding the ones that are relevant material to your business, pulling invoices, looking at signatures, comparing them to a signature book, asking a lot of questions to understand what your approval hierarchy looks like, what your approval policies are, and then checking the efficiency and the execution of your controls to make sure that you've done, as a department, what you need to do to ensure that those controls are in place and functioning daily. Skip ahead to after the fact. Let's say we've automated AP. Now we have a workflow in place. We maybe have an intelligent capture product to extract the data directly from the invoices. approvals are automated through a systematic workflow that allows you to pass invoices up your hierarchy. What happens then is they typically send a tech auditor who's going to review your system, take a look at the controls that are built into it, compare it to your written approved hierarchy, and then just run a check to see if you've made any changes. So what I've kind of illustrated on the slide here is just at a very small customer level what we saw as the year-end financials audit cost for a solution or for a company with no automation, and then down below a company with a fully automated solution. So you can see just in the cost alone that's about a 90% savings on a very small organization that has a small number of invoices passing through that they automated. So you can imagine if you're a million invoice company or a 5 million invoice company that gap just grows bigger and bigger between the two costs. So really now what we have, hopefully, if you can express this value, you have not only your AP manager that we had before, but maybe our controller, maybe the audit committee who are also on board with this situation. They can see that there's value in reducing the level of engagement from Big Four accounting to come in and manage your internal controls or the year-end financial audit. Big savings there and a big win to help connect you to the rest of your team. The next slide, really, I wanted to talk about early pay discounts and purchasing. And really what I mean here is the ability for AP automation to allow a level of visibility to both your treasury groups and your procurement groups to see what's really happening in your purchasing, and also as well with your early pay discounts and your supply chain financing. So I'm going to give an example, and I'm not going to read through the bullets here, but I wanted to give an example of new vendors. It's a problem for a lot of organizations. I call it vendor creep, where you have maybe a preferred vendor, you have a national program negotiated, but not everyone knows about it, not everyone follows it very closely. So what you can do with an automated solution is make some routing rules, make some intelligent rules, some intelligent conditions that if your organization purchases with a vendor that's outside your preferred vendors on certain GL accounts or certain inventory types, you can take action on that. So instead of just bleeding out new vendors and having new vendors setting up all the time and taking away from your negotiated programs, you can take action on that. You're probably still going to have to pay that vendor one time, but you can shut them off. You can route them to the procurement department. You can reach out to the buyer that's using the unapproved vendor and get them to change the behavior so that you can drive that in-policy purchasing that you need to have. In addition, you can use similar kind of rules and conditions to involve Treasury in your purchasing process. If you want to take a look at dynamic discounts or the discounts that vendors are offering and compare those to your cash flow bills, maybe you're seeking new discounts. Maybe you aren't taking advantage of a lot of offered discounts. Maybe you don't even know they're available. You can use a capture product and an automated solution to know that those discounts are available and compare them to your cash flow goals through intelligent routing, and then take advantage of them when they meet your cash flow goals. And that's kind of what I've illustrated here. Our solution gives you visibility to potential early pay discounts and allows you to communicate with the vendors offering them. You can analyze these discounts throughout your organization and easily apply them when they fit your supply chain financing goals. And this applies not only to just early pay discounts, but again, like I said, your procurement and purchasing department. Connect your buyers to see what's actually happening and what's not happening that you want to happen. So hopefully now, in addition to the team we had before, we've also got Treasury and our buyers, our procurement department. They're on board with your automation solution. They're ready to stand with you when you're trying to argue your solution on the big list of overall projects. One last example I wanted to bring up was sales and use tax. Use tax is a common problem for accounts payable and invoicing and purchasing. It's self-assessed tax, if you're not familiar with it, that's not charged by a vendor for typically intrastate transactions, but it doesn't mean you're not liable for tax. There's a lot of complicated rules on intrastate transactions, who pays, ship to, ship from, and those are complex. You typically need a tax professional to take a look at those to determine when you need to accrue use tax and when you don't, and then actually make those accruals and file those purchases on your use tax returns with the state, county, or local government. So the audits can last for months. They'll come in, they do a similar thing to the financials audit. They're going to come in and look at all your purchases, find where you didn't accrue tax, and charge you the tax and an interest and penalty on the purchase as well. So what our solution offers, or what a good AP solution, automation solution offers, is the ability to add those intelligent rules again. So if an invoice comes into a certain general ledger account and there's no tax that's scanned or captured from the invoice, it can route to tax and they can take a look at it. We can interface those solutions to a Vertex or Sabrix type tax solution, so that if they're making the calculation or the accrual, the document can come along with it for tax to review. So again, another point of contact that AP touches already that automation adds a level of value to. So again, what we have hopefully here is another group of accounting professionals that are on board with the solution, the tax VP. What I wanted to show about connecting a team and arguing the additional value beyond just the hard ROI that might show up on your internal projects list. Our solutions for back office are outside just invoice processing. We have procurement solutions, expense processing, HR as well, in the rest of the back office, and contract management. So in many cases, an AP automation solution is just the start, and you have team members that are even outside the accounting group that can make the argument that starting an automation or a document management solution is right and does belong above the red line on your priority list. So a little bit about Perceptive Software. I just wanted to run through and display this slide. We were founded in 1995 in Kansas City. We're business process and content management solutions. We're one of the 10 largest providers in the world. We were acquired by Lexmark International in June 2010, which has enabled us to grow our business and have capital investment and support that we were looking for to kind of move up and take our business to the next level. We have 3,000 customers in, I believe it's 40-plus countries now, and we have regional offices around the world as well. A little bit about the value of our experience. We have 700 customers now just in accounting and finance, HR, and other back office areas. Like I mentioned before, we've got solutions for accounts payable, accounts receivable, contracts, mailroom, order processing, expense processing, procurement and requisitions. And something we're very proud of is that we easily integrate with any application or major ERP system. We've got integrations with all the major ones listed here, as well as homegrown systems and some of the older kind of legacy ERPs, Microsoft Great Plains, things like that. We really are very agnostic with the ERPs and the core systems that we work with, and we're very proud of our ability to integrate with those. We're deployed in all major industries. You can see them listed out there, but really probably any industry, we've probably got a customer in just about anything you can imagine, and benefits regardless of scope. We've got customers as small as 10 local users or 10,000 global users. So a few case studies here, and I won't go through these in detail, but just a couple major customers. Avis is one that really jumps out at me. They were able to cut their invoice processing time by 1 week and take advantage of some major early payment discounts by doing so. Bentall Kennedy streamlined their AP process, and through reallocation of resources and the early pay discounts and the procurement savings, were able to save $1.7 million per year. I think if I remember right, their return on their investment was about 5.5 months, something like that. So several customers here, and we've got more case studies if you're interested in seeing those. So that's what I had to present to you today. Hopefully it's helpful when you're arguing for your technology product or solution within your organization. This is our contact information on the slide now, and if you've got any questions, we're always available and happy to talk to you about AP automation or any automation or content solution that we'd be very happy to help you with. Thanks for your time.